Hi, everyone. Thank you for joining me. Today, I'm going to be talking about the Financial Literacy March publication, Master Your Credit Scores, Unlock the Opportunities. It's a key part of your financial empowerment pathway. So this affects our financial lives more than we realize. So what is your credit score? It's basically like your financial report card, just like in the school. It's a number. It's a number. One of the most used is the FICO score. It goes from 300 up to 850. So the higher the note you have, like the better the probability that you're actually going to repay the loan, the potential loan that you're taking. So if you have a better score, you're going to get better loan conditions. It's not really necessarily to get obsessed over getting the 850. Usually being just over 750, that is going to give you the best loan conditions in the market. So let's see an example. Let's say that we have two persons um, that they both want to buy the same car and they are trying to get the same type of loan, the same term, the same down payment. But the difference is that person A has a credit score of 850. That means that they are probably around this like fair note in their credit score versus person B that has a credit score of 750. They have this very good condition on their credit score. So person A, the one that has the lower credit score, is gonna, with the condition in the market right now, they're probably gonna get an interest rate around 14% versus the person B with a much better credit score, they are gonna get a lower interest rate, which means that at the end, they are going to be paying a bunch less interest to the institution, to the financial institution. So there is an actual impact in our finance if we have a better or worse credit score. So how can we manage our credit scores? Let me show you. 30%, 35% of all our credit scores is based on our payment history. This means whether you are or not paying your debts on time. For example, if you have a credit card and you receive the minimum payment in your statement, this is following that you are at least paying your minimum balance, your minimum payment on every statement before or in the due date. This doesn't mean that it's the best option for you because if you are just paying that amount, the next month you're gonna start paying much more interest. And remember that interest rates from associated with a credit card are not the best in the market. The second option, or the second most important thing for our credit scores are the amount owed, meaning that how much you max out your credit cards. The recommendation is that we only use 30% of our credit limit. So if I have a credit card that has 1,000 credit limit, I am only supposed to use $300 in that credit card. And having more credit limit on my own, like on the whole, it's gonna give me a better opportunity to manage that 30%. Then the other categories, I really believe that we don't have much management over them. 15% is based on how old are we on the system. That means that if we are wiser and older, having our credit cards and using the system, that's the better. The recommendation in here would be to not close your older credit cards if you don't have to, because that is gonna help you boost a little bit your credit score. Then you have the credit mix. 10% of your credit score is based on this. That means what this model is trying to see if you actually pay all your bills on different type of loans. And the last 10% is new inquiries, new credit, new inquiries. The recommendation in here would be not to apply to many type of loans or credit cards on a short period of time, especially if you already know, oh, I'm gonna apply to buy a home next year. So this year you should try to maintain low key on applying for new credit cards. So now that we know how to manage a little bit better our credit score, where should I find my credit score? There are many credit card providers, like banks, institutions, that give you the opportunity to see your credit score over your online banking. I think that that's like the cheapest way or the more affordable one. There are three agencies that make they follow our credit reports, and with that they make our credit scores. But you have to be aware that if you actually apply for that, there are gonna be costs associated. So you have to be aware of that. If you decide to pay, what are you paying for and for how long? And if that is gonna affect your actual budget. And what I do encourage you is to, because we have the right to request one credit report, and our credit scores are based on our credit reports. One credit report per agency, so 3 credit reports per year for free. You can have or access this over annualcreditreport.com. That's the only reliable source you should go. Obviously, you are going to have to identify yourself. And after that, you're going to be able to check your reports. You should be looking at them at least once a year, especially because you want to know that all the things that are listed over there are correct. And if there's a mistake, you should dispute them with each agency. So if you want to improve or you want to keep a good credit score, you should always be paying your bills on time. You have to keep your credit balances low, and you have to check your reports at least once a year at annualcreditreport.com and dispute if there's any mistakes. A good credit score doesn't just help you to get better loans or rates. It actually is going to help you open many financial opportunities. So take care of it. Thank you very much.